What's happening, guys? We've got a short video, I think. I always say that, and then it ends up being double. But I don't have too much more to add on to the last couple weeks because I feel like each and every single Sunday video scan, the last 2 or 3, have been just so timely as far as take this information and apply it the next week, and it's going to help you. At least for me, it's helped me in a big way. So I think it's really just taking those last couple weeks and still applying that same action because we're still in that same market environment, right? And for right now, with last week was the big play was AMD. I had some puts on that when I had tweeted it. Even if you're not in the room, I tweeted when I bought the puts because I knew I wasn't going to hold it overnight. I wasn't going to take on the risk overnight. Just you never know, right? So I was happy with an educated risk with the put buy, and I literally bought those in the 121, 122 range, and ended up fading out quite nicely. I bought the 116, 118, 119s for the week, the weeklies, and ended up obviously unwinding pretty nicely. So the other thing about AMD is you don't have to worry about circuit halts. You don't have to worry about one newsletter coming in or out or somebody on Twitter mentioning it one way or the other. And most importantly, you don't have to worry about liquidity, right? So, some of these low float type trades, you could be outsized. I talked about that last week, outsized for small caps. As you progress as a trader, you start to realize that you potentially could be on your own risk, right? You're creating your own risk by oversizing on a particular name. With AMD, I mean, I'm only speaking for myself, but I don't think most of you could outsize yourself on that position in the sense that, you have a liquidity issue. So what I mean by that is, I could run out of buying power on AMD and it's still not even I can be out within a penny, right? And I think that it's nice to have these big caps trading like small caps, without the whole issue and, at least having to worry about liquidity like we do on small caps. So I always love when they start to act like this. Obviously the next step with AMD, we had that nice parabolic move, we had the pullback. So now for me, it's a reminder, wait for the best setup. Because sometimes you want to keep on going back to the well, back to the well, back to the well when it's good. And same thing with TQQQ for me, sometimes with UVXY for me. And I'll crush it the first 2 days and then I'll start to oversize and give back, thinking that it's going to be like the last times. So I want to be aware of that this week on AMD just to make sure that I'm not just trading it to trade and really zone in on what really makes it a nice opportunity. EJH, this was a big one. It was another one of those Chinese pump scams where they go out there and they're pushing out these tickers and they literally just sell it down, 70-80% on the day. So if you've been in the room, obviously you've seen it on Twitter about SNTG, UTME, EJH was just a new one, TIRX, RCON, all these. And really nice alert in the room. I had a feeling it was going to turn into that based on how it was trading actually the day before. And then it started to happen again the following day and ended up fading this thing from 20 down into unfortunately, I think I made it to 10s, maybe max, 10 or 11, I think, if I recall correctly. And then it went down to, obviously it kept on going down. So, it was nice to get, it would have been nice to get 6, 7s, 8s, but, when you start taking on a decent position and it starts kind of like saying, all right, how greedy are you going to be? Sometimes you just got to take it. So, anyway, like I said, the last couple of video scans have been very, very timely. I really think that applying the concepts that I went over, it should have helped you as a trader. It helped me personally. And, again, it's all about firing on cylinders and doing what you do when you trade the best, which we're going to get into after I give away a t-shirt, actually 2 t-shirts. So, David Mizrahi and Simon Piper. You guys got the free t-shirts. All you have to do is leave your key takeaway. So you can write, whether it's 10 minutes and 12 seconds, you just write, 10:12, and then write your key takeaway. That will allow other people to click that timestamp and go right to it and listen. We ask you guys to do that. It helps us. We make the micro content. Give us a like. give us a comment, and as a thank you, I give away, like you guys know, scans, Icon Meals, IU, t-shirts, you name it. So Momo Traders too. I actually keep on forgetting to give away a Momo Traders book, and so maybe I'll do that next week. So topics were short and sweet for today. Stop trade and trade. Let trades come to you. And what happens is a lot of times we start hunting for a trade. And when I got back to the desk on Friday, I took most of the day off. And I was kind of like hunting, like, all right, where am I going to short AMD? Where am I going to do this? Where am I going to do that? And I was like, you know what? Why am I doing that? This is, if this happens, I would take the trade. If not, forget about it. And what I think happens, and I put out a tweet this weekend, stop trading the trades, stop finding trades, and let the trades come to you. Think about, the difference between micro and macro, right? Income versus wealth, linear growth versus exponential scalable growth, and let the trade work for you versus working for the trade, and just all in all, focus on being a better you, right? Tomorrow. And that starts tomorrow, Tuesday, Wednesday, whenever, whatever day you're back at the desk trading. Probably for most of you, it'll be Monday. Don't focus on other people. Don't focus on what they did. Don't focus on anything but how are you going to become a better trader tomorrow. And I think that these few things are a good starting point. And a lot of times when I'm trying to find that trade, it's because I am in that get back mentality, or maybe I feel like I missed a couple of different opportunities. But if you start thinking about macro versus micro, you're going to have to do a lot less. You're going to start thinking about this big picture trade where you can make 10x what you're going to make on all those scalps, and you're going to let the trade work for you. And you're building this foundation which you're going to need for later, because what happens is as you grow as a trader, you come from more of the piker scalp mentality, which there's nothing wrong with that, to bigger picture, letting trades work for you. And you have to kind of unlearn that process of being small-minded and micro, right? Micro mentality. And you got to start thinking bigger picture if you want to get those exponential types of trades and growth. So you can always trade, in a micro perspective for income, and it's a great way to do it if you're new and if you're beginning and all that kind of stuff. But you will always be restricted on your growth if that's the only way you do it. If you always get in and you're already thinking about getting out, you're always going to be restricted. You're never going to have exponential growth. You need to start thinking about the big picture, the macro kind of environment here, and let the trades work for you. And I promise you that if you figure that out, if you figure out what you're best at, and that becomes your A+ setup, that 2 or 3, or in this case, sometimes 2 or 3 times per week, but 2 or 3 times per month or 2 or 3 times per quarter, those will make your year. And that's really what you need to focus on, because that's what's going to set you apart. That's what's going to give you that breathing room, that padding, that stack, that extra cushion to be able to continue to get better and better as a trader. So think about that. Couple other notes that I had. Front side, ASTR, AMD, trades like that, right? Looking left. So for most of you, this is where I lost most of my money as I was becoming a better trader, as I was learning, as I was progressing, right? Developing and getting a proper process. That's not to say that there's not a lot of money on the front side of the trade. There is. But most of us are going to be stubborn. Most of us want to nail the trade. They don't want to cover. You got a good entry. You want to see what it does. You name it. And it just starts to, continue to build and build and build and build. And all of a sudden it goes the opposite way you think. And it continues to go higher. And you've got too many. And you're, losing money. So it's easy just to avoid that. So every single day, whenever I'm trading the front side, I always put a level. And that level is the key where I would be potentially patient, where I would actually let the trade start to work for me. If you're above that level, you need to be proactive with covers. So being proactive with covers means if you short and it flushes out, you've got to be there. You don't have time to, maybe it'll continue to go down. Guess what? By the time you think about covering, it's already rebounded back up. So if you are going to trade the front side of the move, you have to be proactive above those key levels. You have to assume those key levels will hold. And if you do, you should be safe. And if you don't, you're going to continue to get chopped and chopped and chopped and chopped. So that's why I'm always a broken record, and that's why I really think that new traders should avoid the front side of the move. But there's a lot you can learn. There's a lot you can see, and we talk about it every single day in the room. So I never commit size unless there's a parabolic move on the front side, or we finally break under key levels of support. Not just breaking under, but confirmation. Breaks under, retest, breaks under, fails. Lower highs, fails. And it might take a couple tries. You can't be afraid to adjust your size. Can't be afraid to get in and out a few times until that actually, pans out. And so, anyway, that's that. And I really think that if you add that to your trading arsenal and, just wait for those key levels to break, be patient, let them confirm, you're going to see a big difference in your drawdowns on the front side of the moves. Not to mention, you will get exhausted on the front side. Sometimes I get in there just to get a feel for things. I've mentioned that every single Sunday scan. And sometimes it's still confusing for people. Oh, how do you let it go that far against you? Because it's only like 10% of my position, if that. That's why. So in order for me to get some of the reads that you see that I get on particular names, I have to be in there. You got to get a feel for it. You got to be part of it. And for a lot of people, that's not good because they end up adding and adding and adding, and then they blow out at the top. I won't add. I won't add on the front side of the move. All right, a couple people sent in questions. My question is this the type of market where you can let a trade work, or do you take what you get before it reverses an hour later? So there's been plenty. Actually, I'm going to combine that. So how do you identify a quiet fader based on prior day action? So both these questions are kind of related in a sense. So if I want a full day fader, if it's the hot stock of the day, right? If it's the first day of the move, I might be more interested in covering that first flush down. It just depends on how it reacts. If it's already got a heavy seller, if it already fails at open, then I'm going to be more patient with it. But if it's jumping around and it could go either way, I want to let everybody else figure it out for me, and then I'll come for it. I don't want to be part of the decision making, the figuring it out, because you end up getting exhausted. So it just depends on what the chart is. Sometimes the filings come into play. Sometimes it depends on who's on it, right? If it's been being pushed all over social media, you guys know that's the wrong type of buyer, because as soon as it starts going down, they're not going to sell, they're not going to sell, they're not going to sell, they're going to freak out and sell. And it ends up being a fantastic fade, just like you saw the past week. We had, I think there was like 2 or 3 different full day fades from, social media pumps. And it's been a great profit center. I hope it does not stop. But, the key there is just letting them kind of put the air in the flat tire and just keep on, there's a hole in the tire, but they just keep on, pushing it with air. And no matter how much they keep on putting that air in, it just won't, continue to go higher. And that's the action I want to see. More posts, more posts, more posts, lower, lower, lower. And then, as you guys know, you see what happens. So the quiet fader, based on the prior day's action, whatever was hot today, right? Nobody's going to care about it tomorrow. So there's always like 3 or 4 or 5 different names. You could have all of those on radar. And what I like to do is, I'm not going to size into them, but what I like to do is I like to get into a couple of them if they've had a morning push and they start to fail, test again and fail. I'll start to get in there across maybe 3 or 4, maybe 5 different names potentially sometimes, but usually like 2 or 3. And the goal is to let those trades work while I'm focused on the main trades of the day, because nobody's looking at those ones anymore. They're all focused on the hot ones today. So I want to let those ones work while everybody else is looking at the other ones. And the key there is that it's not a whole bunch of people trying to figure out things. You don't have to deal with the emotional, the momentum for the day, algorithms, all that kind of stuff. It's past, right? So you still need risk management, you still need a plan, you still need, your goals and everything, but it's a great way to build your account by keeping track of what was hot yesterday and the day before as it breaks key levels, as it continues to fail to follow through. Once it flattens out, yeah, your risk goes up, your edge goes down. So I usually like to, kind of move along. But the secret, the key for those types of trades is focus on what you cared about yesterday. And most people are not watching that. Next question was using FinViz. What filters do you use on scans? So we have a beginner's series and we have an intermediate series on YouTube. It is the same scan settings that I go over on that. It's the same scan settings that I go over in textbook trading and tandem trader. Nothing has changed. I still use the same thing. And then I also kind of use thoughts from the day. What did I see today? What was a hot runner today? What was on scan last night? And I use all of those as potentials as well. So I always go back and look at my prior scans from the night before, but the FinViz settings are always the same. Last but not least, how do I identify when an algo enters the stock on a chart? Think about what's humanly possible. And when you start seeing all this craziness go back and forth, and just the level 2 flickering and huge bids here, huge offers, and just things that are not humanly impossible that fast, that quick, that's a machine. And when the volume starts tripping and, it just starts to do things that, most of the time you'll see, individual traders kind of come in there and you can kind of tell they're playing and where there's a seller, where there's not. But when it just gets to being too much and the volume, you can see like the time it sales is just like just keeps on going back and forth. That is when it starts coming. I think WHLR. WHLR. If you guys go back, I told the room to record it. That's how you learn tape. But if you go back and you watch, there was 2 instances where it just started going completely bananas. And that was just not, it was not possible for it to be a human. So anyway, let's get right into the scan for the week ahead. All right, guys. So as always, I'm not a financial advisor. This is for educational and informational purposes only. If you're not okay with that, shut it off. If you're okay with it, you can continue. My goal is, as always, to kind of give you a look of how I prepare and what I do to get prepared for the week ahead. Right now, as I've said, I've been trading exceptionally well. So right now, for me to get involved with a trade, I need to see a big opportunity. I don't really care about the little small trades right now. I don't really care about getting involved at 7 a.m., 8 a.m., unless there's a big opportunity. If it's a potential where I can make a dime or 20 cents, I'm not interested. I'm looking for big picture right now. I'm looking for the big action, and I'm leaving all the micro stuff to, letting other people figure it out so that I can focus on the macro. So that's where I'm coming from, and that's where I'm getting prepared from at the very moment. And I will continue to do this until I do something stupid, and hopefully I don't. But like I've discussed, when you're firing on all cylinders, you want to stay firing on all cylinders as long as you can, because it starts to compound and exponentially grow faster than you can imagine, and all it takes is that one dumb trade to kind of reset that, right? So I am going to continue to stay here as long as I can. BTBT. This is a great example of stepping in front of a trade, not waiting for key levels to break, trying to find the top, and exhausting yourself. So right now, Bitcoin is up even higher over the weekend. So there's a good chance that this could be 18, 19, 20. There's a good chance that it could continue to go. There's a good chance that there's still shorts on the wrong side of the move. This was just 8 last Friday, and they filed the F3, and everybody kind of hammered down, and then everybody's kind of thinking, all right, they're going to raise, they're going to raise, they're going to raise, they're going to raise. Meanwhile, it's doubled. It's doubled since that filing. So there's a lot of traders, that's actually more than doubled since the filing. There's a lot of traders on the wrong side. I can assure you that when this pulls back, it will pull back for multiple days. It will pull back further than you think. You do not need to find the top. When it pulls back, you'll get a $2, a $2, a $2. There's a good chance that you're going to get multi-$2 fades. But if you try to find the top, you could be down 2, and then down 2 more, and then down 2 more, right? So be patient. If you do trade the front side of it, if you do react to this move, and you're on the front side, make sure that you proactively cover. But this is going to be a key main watch. I have a feeling that everybody's going to be watching this. So, with that said, everybody's waiting to short this thing. So what does that tell you? If everybody's waiting to short this, and you nail the trade and it flushes out fast, and it stops going down, what do you think is going to happen? Everybody's going to be looking to get out of that position. Everybody's going to be looking to cover, right? So the faster that you're able to identify that and be proactive about the covers, the better opportunity you're going to have, and you're going to be able to resize if it stays heavy. So that's how I'm going to play it. If I reactively trade it, it flushes out, I'm covering, anticipating that it's going to hold support, anticipating that there's a lot of shorts that are still bent, that are competing for my covers as well. And if and when it starts to roll over, if and when it stays heavy, at that point, I'll be interested in scaling back in and letting the trade work. MVIS, I think, is going to be a big one. For whatever reason, you know, obviously it's a hated name, but they just do such a great job at trapping shorts over and over and over again. And so, ideally, it gaps up. Ideally, we have some morning action. But again, with this one, be cautious. You don't want to step in front of it, but it's going to be a great $1, $2 fade at some point here soon. It's going to be a main watch. Ideally, it gets up to that daily VWAP level right over here. But, you know, you can see intraday it held extremely well. You know, and on Thursday, it faded off into the close, came right back up into this prior resistance from the prior day. Just draw a line right over here. And then now it's continuing to hold. So at this point, I wouldn't want to be patient with any short unless maybe 1540s was having trouble. But for right now, as long as it's kind of basing in this 1540 to 1560 level, it could be setting up for the next base, 16, 17, 18. But higher the better. Failed follow through momentum versus VWAP as a potential trade is my goal on that one. TQQQ, I don't have much to say. I just think that we're going to have a nice trade opportunity at some point soon. Whether it's going to be $3 or $4 up and it sits back down flat on the day, or whether it's going to be a $5 to $8 pullback day. When and if, you know, if we ever pull back again in the markets, this is my go-to, and I think there'll be a great opportunity. FTFT, I have a little bit left. I sold most. After hours, it had a nice rip up, and you can see it started to have a little bit of trouble. You can see the, draw a line over here. You can see it started to have trouble right at the 360 level, and then it busted under this level right over here. So what I'd like to do is, I think I have about a third left, maybe a fourth, but morning shove versus 340s, and I'm looking to use 340s, 360s as sort of that blow-off level, failed follow-through, or potential fade back. Next is the continuation. FSLY, we talked about it. I tweeted it on Thursday, what I thought was going to happen. What I wanted to do was look for a flush versus 38s, 3850s for the potential gap fill. And so far, so good. And I still think that we could potentially get in there. So that could be 45. Then everybody's going to say, all right, we filled the gap. It's time to go back down. They hammer it short, and then it continues to hold. And maybe we get that next leg. Just like we talked about on Sava last Sunday. I said don't underestimate a bear market rally. I know it's not a bear market. Same concept. Don't underestimate how far this thing can go. 60 to 100. 60 to 100 bounce. So, you know, similar situation on FSLY. Don't underestimate how far this can bounce, because people look at it, they say the earnings, oh, they were terrible, it's going to fade, blah, blah, blah. What if it was factored in? What do you know about that company? Probably nothing. It's probably the first time you looked at it. You read the headline. So stop acting like you know what you're talking about. Me included, I don't come in there and say, oh, it had missed earnings, so it should be down. No, it faded into it. It's been fading for 6 months. So maybe it was priced in. Maybe it's a buying opportunity. Maybe that was the kitchen sink quarter. Maybe, you know, there's a lot of things. And so there's a very good possibility that that was that. And if it fills the gap, traps 44, 45, it could go 47, 48. BYSI, I'm going to be watching for continuation. I was long. I sold it. I was up like 3-4 points. I ended up losing about $1 on it. But I'll be watching it. No position, but looking for dips if it starts to hold. Maybe we get a nice breakout towards 30, 35. FLGC. I'm letting this trade work. As I wrote on Twitter Wednesday or Thursday, feel like shorts were stuck. I think it was Thursday. So far, they've been holding trend. I do think that it could continue to go. Could go maybe 15, 18 on a blow off, something like that. One thing though, you can see that there's, obviously resistance in this area right over here, 1370s, 1350s, right over, let's just call it 1350 to 14s. So you want to assume that that's going to be the top. If you're buying breakouts, you're probably going to lose on it. The only way that I would trade this, and the only way that I have, is buying when everybody is afraid of it, when it looks like trash, and selling into the rips. I've been selling into the rips because you want to sell those breakouts. If you buy the breakouts, you're going to get run over. Failed follow through. KXIN, higher the better. Ideally, it comes into this prior, 310, 320. Ideally, 320, 330s is what I'm hopeful for. So, morning shove, failed follow through, and look for the backside move. Any higher the better. Looking for failed follow through there. And looking for 520, 550s and fade off. Groupon, higher the better. This one, I wish I was here on Friday to see this. It always does these huge full day moves. But I'd like to see it gap up $1 or $2 and then fade back flat, potentially go red from there. Last few, GLBE, higher the better. ACY, higher the better is the goal. And potential fade back into teens. So those ones are just sort of staying familiar type trades where morning moves, GLBE, ACY, and GRPN, $1, $2, $3 type moves in the morning, give back for the full day is what I would love to see. So that's what I'm prepared for. I'm not looking to trade everything. I'm looking for the big pictures. There's obviously going to be some big trades Monday and Tuesday because it is Monday. Right, and there's the pent-up demand from the weekend. Everybody wants to be part of the next big runner. Whatever's running pre-market, everybody jumps on, everybody chases, and then it ends up being, many times a nice full-day fade. If it catches, though, you got to be cautious. So anyway, that's what I'm going to be waiting for is those big macro-type trades. I've got my BTBT and MVIS as my main watches, and then whatever else we add. But again, don't forget those secondary watches, the ones that everybody forgets about. Those are going to give you a lot of profits when nobody's looking. That's it. Have a good weekend, and we'll see you guys in the room.